The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Hi, folks. This is Basil Chapman sitting in for Steve Rhodes. Steve had some problems with his internet, and I was around. Usually I do the 11 o'clock till 12 o'clock show. It's called the Tiger Technicians Hour. My service here at TFNN is called the Opening Call. Very comprehensive daily newsletter, and we have a number of stocks at like 14, 15, 16 bullet points in the Traders Corner every day. So for those who don't have time to go through all the different charts that I send out every single day to the site at TFNN, I also have my Traders Corner, which is a very comprehensive look at what we have, what we're looking at. It also has the price levels to be watching on the Qs, on the TLT, the GLD, the DIA, SPY, even if we don't have any positions there. Then we might even have some stocks that are very important. So let's do a couple of things here. Some of you might be brand new to my particular methodology. I want to just show something real quickly. In my methodology, you don't necessarily need anything. You don't even need candlesticks. You can use just a price point, a bar chart. And basically what I look for is the most obvious lowest low bar. This is what I call a naked chart right now. All it's got is the candles. I look for the lowest, most identifiable lowest low bar. In this case, it's the E-mini trading, the March E-mini, which will close out in a couple of days. They'll be changing to the June. But it doesn't matter which you use. They should have the same price points. The low was made at 1873.75 at 10 minutes to 6 this morning. This is a 10-minute chart. And lo and behold, it goes. I look for at least 4 higher peaks, and I alphabetize them with an uppercase going up and lowercase going down, and this goes uppercase A, and it makes a peak because the very next bar after the 1876 high at 10 minutes past 6 has a lower high, which is at 87. So that makes a peak. It's as simple as that. Looking at the mountain, what's a peak? A peak is that little V-shaped top. And you can have higher peaks and lower peaks. And here we go to a higher peak. We go to peak B, then peak C, pulls back, and then breaks out as a huge leg D. D is where you want to be careful. This turns out to go to the 5th highest peak, peak E, sharp pullback. That's where you can expect the deepest pullback. And what does it do? It goes from 1880.75 down to a low of 1871.50. Now it's trying to have a bounce. And that is part of the characteristic of what I'm looking at here. Now, I also teach about the MACD, the moving average convergence divergence, and the slow stochastic. Did I just put that in here? Yes. I just copied and pasted. Now, what happens if you put the MACD in? I also have behind you in this color changing relative strength index, Steve Rhodes. I believe that this is the 5-period, the 5-period RSI. Now, I use that. I love when people discuss, here on TFNN, we're all about education. And what do we do with the education? Everybody has a little something else. Or they use the same technique and they've got a variation on the technique. In my case, mine is totally unique. The concept of alphabetizing and naming and grading each successively higher peak or lower peak, a lower trough. We call them troughs on the way down. That is unique. For 25 years or something, I've been using that, and I've never seen it written about or anything about it. It is such a simple way of being able to, particularly in the case if you're a trader, it works. Look, here's the 5-minute chart. I just showed you the 10-minute chart. There's the monthly chart in the S&P in leg D right now. It's the same technique. There is no other technique. Now, the technique of using the MACD and stochastic, and in my case, I use the on-balance volume and relative strength. In this particular instance, I've got the relative strength here, but this is a much shorter one. than my normal one, because I experiment with it. There was someone I met a number of years ago who loved to use Harlan, loved to use the 32-period moving average. So for years I've put it on the chart, and I've just tested it. I don't believe in talking about a technique as being sacrosanct. The moment you find it and you do a back test, no. You need sometimes months or years of using that technique over and over and over to see if it really works under all conditions. So the alphabetized absolutely works. We've seen it here for the 11 or more years that I've been here at TFNN. However, I'm experimenting with this, so I'm not going to talk about that one because it's still there just for show. But I do talk about mine, mine being the one that I've used for so long. It is the RSI. In this particular case, the input is a 14-period RSI. And that showed that when this E-mini on the 5-minute chart went to a high of 1879.50 this morning at 5 minutes to 9 Eastern Time, it made a particular high with the MACD and stochastic. Then what happened when it went to that E, you had a failing RSI, you had a failing stochastic. So I'll be teaching, a little later this month, I'll be teaching a webinar for my subscribers about this, the MACD and the slow stochastic. And we'll get all that information out real soon. But here's the other technique I use. You see that maroon line? You see that resistance line? You see how the price, the 5-minute E-mini, was repelled once? It's trying again. It got repelled twice, and now it's trying a third time to break above 1875.50, where that line is, and we'll see if it can do that. If it does that, it means, yep, there could be a bounce towards the green line, which is the 200-period moving average, and that's at 1876. Meanwhile, back at the ranch, the naked chart is showing you that that long wick candle, all you need to see is a test of 1873, a point and a half lower, and you get halfway into that wick, there could be a real quick test of the lows. The price right now, if you're bullish on this, you've got a long position, you want to see it take out 1874.50. All right, let's go to the numbers. I just thought I'd go through a little bit of that to show you about something about the Chapman wave methodology, and I'm showing the S&P right now, the low of 1737 on the 5th of February was the low, and each successively higher peak means that you got peak A at 1847.50 on the 19th. You got peak B at 1858.71 on the 24th of February. At 1867.92, you got peak C on the 28th. And now you've got an established peak D at 1883.57 from the 7th. 1883. Let me just type that in. 1883. 1883, and that's from 3 days ago. And yes, you can go higher. All you need to go is, in this case, 1 penny above that high, and you're going to be making leg E. So this is a very critical day. I have a technique that I talk about, the Chapman wave trend gauge, and that's saying that by Wednesday morning, there should be, it could happen at any point, but the low that is established intraday over the next day or two should see a rally of between 7 to 9 points that carries over into the cash, from the futures into the cash, and that says there could be a counter trend rally, and then when that fizzles, you've got to be really careful, because that's going to test a bunch of things. If we break above 1883.57, that starts leg E in the weekly chart. That means we're holding well, because that 9-period moving average has become support and continues to be support, not resistance. The moment the S&P breaks under 1867, I'd call it 1866 to be safe, that 1867.80 area where the 9-period moving average is becomes the resistance. So we're going to be watching that real closely. So give you the other numbers. The Dow is now down 6. It was down about 31 points just a few minutes ago at 16,411. The S&P is down 86 cents at 1876. The comp index is up 2.5 at 4,337. Gold is up, I'll tell you in a minute. Gold it was up 8, and now let's see, it's up 7.90 at 1349.40. Silver is up 24 cents at 21.15. You've got bonds up 1/32 at 131 and 7/30 seconds. Dollars up 6 cents at 79.83. You've got this is also quite important. You've got copper at 3.03. I have to tell you, if copper starts to close underneath the 2.99 level, that's not going to be very good at all. It's going to be saying that there's international weakness in copper. This is with the broader aspect of building materials, that whole construction area, and we can see it. I showed in the previous hour, the few minutes I was on, I showed the FXI, which is the China 25 iShares FTSE China 25 ETF, struggling. It is down 5 cents at 34.39. It's got an H pattern in the daily. It's got an H pattern in the weekly, and it's got a series of H to M patterns in the monthly. Unless this index can punch quickly to the 37s, all it needs to do is to take out the low of last week of 33.46, and that'll say, be careful, because the whole 32 area to 30.65, the 200-period exponential moving average, could very well become a target for the China index. Now, let's do a couple of things like this. I want to show you the volatility index, the VIX index. The VIX index right now is at 1418, down 2 cents. There are a couple of formations, patterns that I'm looking at here that say this whole area of 1344 and higher is so important, because if the volatility index holds and then takes out yesterday's high of 1528, this market is going to become highly vulnerable and come down quite quickly and remain down for the close. It hasn't done that for a while. There's always been, for a while, there's been buying going into the close. So that's going to be important if one is bearish. If one is bullish, what you want to see is 1344 taken out. You want to see very quickly, within a day or two, the 1320 to 1290 area in the volatility index, and you will get a surprise rally. I say surprise because there's quite a bit of bearishness out there, and it'll be a spike in the Dow. Let's go to the Dow now, and I'll explain where I would think it would go. Yeah, and that would say, I'm not sure that the Dow, well, let me put it this way. If the Dow goes even 1 penny above the 16,505.70 high of 3 days ago, I will have to rename that, not G/C. I'm liable to think that it's going to be a C, and it will go to a D. It'll go even higher. But I've been under the impression for a while that the S&P has gone to all-time highs. The Qs have gone to, the QQQ Trust Series have gone to recovery highs. The IWM has gone to all-time highs. And a number of the other indices have gone to all-time highs. Even the New York Stock Exchange with 1,860 or something like that, stocks has gone to all-time highs. I was suspecting that the Dow will fail to break above 16,588 before we get a more substantive correction. The correction, we had a 5 to 7% correction earlier on this year. I'm thinking that there could be another pullback. I'm not yet sure of the percentage, and we'll talk about that when we get back. 877-927-6648. Love to take your calls. Basil Chapman sitting in for the one and only Steve Rhodes.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. Basil Chapman sitting for Steve Rhodes, and this is the Money Masters show. Normally I would be here 11 o'clock till 12, and my Tiger Technicians hour. So, going through the charts, I had a question about Twitter. Twitter's trying to rally. It's above the 9-period exponential moving average, up $1.43 at 55.32. I suspect that there's a trading range here, and what I'll draw, it's very positive on a shorter term basis, that it was able not to pull back all the way to the low of 49. What was that low? 49.99 back on the 6th of February. Let me just put that in here. 49.99. But instead it could have another little arch formation. I suspect it's got a little bit of a rally in it. It'll test the high of 56.09 right now. It's at 55.38. If it breaks above that, you can get it. It would go to a leg C, and it possibly could retest the 56.99 level that was made on the 26th, I believe, 26th of February. So the support that it has to hold by the end of the day is 54.71. Right now it's at 55.45. Now, there are a couple of things that I wanted to talk about here. Basically, what I'm looking at is that I'm looking at the XAL. What is the XAL? Nobody ever talks about the XAL. The XAL is, in fact, the ARCA Airline Index. Huge leg F to the upside in the monthly chart. It could even have recycled. This could even be F/B. Now, I've written here, huge takeoff candle, but not a low bar. In other words, the candle of October that so many charts had in their monthlies is not leg A. Why? Because the low bar cannot also be the high bar except in an instant restart at peak D. Now let me explain that. How do you know when you're looking at the 2748 low in the XAL? I get a $XAL. That's how I get it on TradeStation. How do I know that's a low bar? I don't know until the next bar. So the next bar has to have a higher low bar. That means that the low itself has to be higher than 2748. And it is. It's a 3028. Very, very much higher. Except it didn't make a new high. It went from the 3580 high of the of October to November's high of 3552, lower. So until it makes a new recovery high, you can't count it as leg A. But the moment it does, in January 2012, that becomes leg A, a floating leg A. The next month becomes peak A. Why? Because February saw 41.89 and March saw a lower high. That makes your peak A. Now, the reason why I bring that up is, look, in the charts that we are studying right now, or what it's called looking at, let me just find it if I can. Yes. You see this low bar in the 5-minute chart in the E-mini? That is not leg A. It can't be leg A. I put an A here, but that's not right. Why? Because how do you know that it's a low? You don't until the next bar. And the next bar has a lower high. So you have to wait until this bar to be able to start your count. And the moment you take out 1875.50, 1875.75 starts leg A. And I suspect this is going to be moving up. So this is A. This is A. And it's still A because it's a parallel high bar, because you travel in 25-cent increments in the S&P E-minis. Of course, I'm busy right now, so I couldn't be trading this. Otherwise, I probably would have grabbed the long position, because Stochastic gave you a turnaround. MACD gave you a beautiful turnaround. I suspect it's going to challenge this bar right here. It has a high of 1879.25 and a low of 1875.75. Made it 20 minutes to 10 at some point soon. So I just wanted to go through some of the technique of the Chapman wave. And then I'd also love to take your calls at 877-927-6648. I had a question in the den. Peak D asks about BAC. Now, this is very interesting. It's very interesting if you hit the right key. There we go. Got to go to there. Bank of America is trading right now at 1737, down 10 cents. The monthly chart has had a very concerted move above the 9-period exponential moving average and is in a G/C. I'm inclined to think of it more as a C/G, but I don't even have to worry about it. First of all, we don't have it as a trade. And the MACD is still very strong, and the Stochastic's holding at 92%. It's acting very well. There's no need to even consider what it is right now until you go to the shorter term. That is the weekly and the 120 and the daily chart. I'll be right back. Basil Chapman sitting in for Steve Rhodes. Dow's down 0.50. S&P's up 0.37.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
The ARC Airline Index, and then I had a question about Bank of America. Bank of America is holding very well. It looks, it's acting a little bit like the gold contract, in that it refuses to go down. Gold contract, though, has been making new recovery highs. And Bank of America has just gone from the low 16s to 1739. I'm suspecting that it could go a little high if this is not an E but a B at in the daily chart from the 6th of March. The MACD is strong at 84%. MACD is strong, the stochastics at 84%. If it holds, that's going to be very good, and I suspect then that you will get a C and you will get a D. And that's saying that in the aspect of the XLF, the aspect of the market, the aspect of where we are right now, we could be looking at a rotational correction going on in some of the sectors. Certainly the biotechs have had, some of them have had big moves to the downside, more than usual. Now I'm expecting a bounce in the IBB, but if you're looking at the XLF, it's held very well. And it says that if it was to break above, let's say it doesn't do it today, but it does it tomorrow, it goes above 2250, that says I should seriously consider that there's a recycle, and you could go a little higher into the end of the week or the beginning of next week. I don't want to rule that out. I'm just suggesting that I think that the Dow has limited action to the upside. Now, the question is, has been, what if the S&P makes a new recovery high? Well, If it makes a new recovery high, that'll be E. That's getting us even closer. But the real resistance is in the weekly chart, and it says that 1899 area is going to be that's 20 points higher than where we are. That's very strong resistance. All I'm saying is that I'm seeing signs here that says there's a rotational correction going on as we speak. There are enough stocks that are moving quite well that could hold this market up. And then we're going to see, because a great deal depends on whether the volatility index, which is at 1394, now it's below 14. What I said to subscribers today is under 14, you should get some kind of a rally. Well, the Dow's now up 21, S&P's up 2.34. So for what I've done is I've raised the stops or made tighter stops on our short positions, and we're just going to have to let the market tell us. So that's the question as to the S&P. If it goes higher, I'm going to call that leg E. If if Bank of America holds very well here and starts to rally, it's looking like it's really struggling to break out. But if it goes over 1763, I'm calling that leg C, and it should still then go to D. If it breaks down, it's going to break under 1725. I suspect it'll go under 17 in the next 2 days. Now, the other thing that's really important to me is that the Dow has been failing to go to an all-time high. It's been really struggling, and it should have done it. It's had over 2 months to do it. So that, to me, is important. Another question is SSYS. Is up $1.97. I think that these 3D stocks, this is part of the correction I'm talking about. They've had a spectacular move. Many of them are just correcting a spectacular move. Now, I wanted to go back to the airline index, XAL. And in the XAL, let me just quickly check something here before I... there you are. In the XAL, what will happen is if a break, it'll be like the S&P, a break above 79.88 is trading at 78.77. That's just over a point and a quarter, say, above, and it goes to leg E. That's all I'm going to call it for now. Why? Because the MACD is still holding well, but the stochastic has made a lower high on this D than it made much earlier, even on the B. So there's a big difference, and that divergence is something I always take note of. Now, the other thing is that the weekly chart in the XAL has this alternate count. But let me just show you something here. If I go to LUV, love is for the very... So you've got leg E in the daily Southwest Air, leg F in the weekly, leg C in the monthly, and that's very positive looking out. And it's at all-time highs. Yeah, it broke above the high of December of 2000 when it went to 2333. So it's at 2366 right now. It's cleared the deck. So this is a very positive chart. Short term, I think it's overbought, and it's very close to a pullback. Look at LCC. LCC is, no, LLC, I think it is. All right, let's go back to LCC. Oh. Got a problem here. Well, I'm not even sure what I was looking at, LCC. LCC. Why was I looking at LCC? Let's look at ALK, Alaska Air. Alaska Air is in leg, made a peak D at 91.73. It's pulling back. Hard to believe Alaska Air is it hit the 90s. I remember back in the 30s. Anyway, this is leg E in the week and the monthly. It's a leg C in the weekly. So there's still room on the upside, but the daily is saying, I'm getting a little tired. I could be pulling back here, but I'm watching it closely because it's holding the 9-period moving average. Let's go to a UAL. UAL is, in fact, United Continental Holdings, made a peak F in the monthly. It just needed a few cents to break out, but it didn't. It's a leg D in the weekly, and leg E with a cup formation that failed back at 49.18 to break above 49.20, the previous high, in a left side, right side price time match cup formation. So it's struggling now to break to a new all-time high. Would that be an all-time high? Let me just double check. Yes, an all-time high. Many of them have made a U-shaped recovery, almost 100% recovery. So there you are. Now let's go to JetBlue. JetBlue. JetBlue is also struggling. Made a peak D in the daily, made a peak E in the weekly, and a peak E in the monthly. And so far, it hasn't been able to break above $9.45. It's at $8.88. Now, the whole thing about this is if it breaks to a higher high, $9.51 is the 200-period exponential moving average target, which it hasn't been able to get to since it broke down back in January of 2007. This is the first time it's gotten even close to the 200-period moving average, which is like a magnet. So I'm looking at the short term as probably toppy. I'm also looking at crude oil. Let me just look at crude oil again. Crude oil is trading at $99.49. This is the June contract, made a peak E daily. I've not done the weekly, but I'll do it right now by showing you the continuous contract, which has made a peak A in the weekly. It's in an arch formation in the monthly. So here again, PT said crude oil is going to be on my watch. If crude oil breaks under 98 at any point in the next 5 to 7 sessions, instead of breaking above 102.91, big difference. Above 102.91, it retests the highs. Below 100, there's a good chance it's going to test the 98.99 level, 98.99 level, which is a 200-period exponential moving average. I was suspecting crude oil might spike here, and that's the only way I could see the airlines pulling back. I was on an airline just 2 days ago, and believe me, they are squeezing not just each passenger, but they are squeezing everything. They are, if there's a delay, they don't care, because there's a delay. You're a captive audience, so they just getting every penny they can. Full planes wherever you go. Maybe one seat's left. I suspect Save, which is Spirit Airlines, a very good company, just like Love and Alaska Air, is going to break 60.33 to go to leg D. What am I missing here? HA, Hawaiian Air, Hawaiian Airlines, no, Hawaiian Holdings. Did I leave out something there? I did. Leg D in the weekly, leg D in the monthly. Peak D made today, if there's no new high, above 14.59 in the day, but a very strong chart. I'm suspecting there is a pullback consolidation, but 1280 to 1220 will be very good support. I want you to go through these things to tell you that within sectors, there are stocks that are doing well. Within the overall market, there are indices that are doing better than others. But there is, for me, definitely some kind of a rotational correction here, and that's the reason why the Dow has not been able to go. My 4 Dow horsemen, GE stuck at this peak C. It's at 25.95. It needs to get to 26.37 for leg D. But the weekly is saying, oh man, the technicals are not that good, and if price leads, then the stochastic and MACD in the weekly chart will have to follow. But so far, the daily stochastic and MACD are good enough that it should have gone to leg D, and so far it hasn't. The monthly chart is saying technicals were good. They are just starting to deteriorate now. Therefore, we watch the price, because sometimes price can hold when the technicals deteriorate. You're taking an X-ray or an MRI of the patient. Patient looks really healthy, but when you do the digging, you say, arteries are clogged, or whatever it is. Jane Blue, I'm trying to find, what am I missing here? Let me just check. Now, AAL is also, that AAL is American Airlines, which has just merged with U.S. Air. It's making a peak D if there's no new high above 39.88. Most importantly, it's leg D in the weekly and a leg F/B in the monthly. And this has been superb, but it's not anywhere close to the 63.27 high of 2006. That high was a 63.27. Right now it's trading at 39.05, just off the recovery high. So when I go through these things, I say, okay, I'm watching the airlines real closely. Cameron asks in the den for Baidu, BIDU. This is a Chinese internet company. I don't know yet whether it's broken out in the weekly to a brand new A or if that's a G, but the technicals in the monthly are very strong in leg C. So that's very positive looking out. Baidu BIDU trading at 178.10, down $1.46. Now, just let me quickly finish there's peak A. peak B, peak C, and then a very sharp pullback to the 9-period exponential moving average. Now, I would normally put an up arrow because it's gotten to C, but I'm putting a plus sign. The MACD is good, but the stochastic's down at 70%. This is really struggling. It's going to take a sudden spark, market spark, to take this all the way to 189.35 for leg D. I'm watching this real closely. The action 3 days ago during the day was fabulous. The close was terrible, inverted Roman candle. Then yesterday was a kind of a Roman Chapman wave Roman candle, and today we've gone down, but we have gone halfway into the wick of 177.67 today, and that says we should retest the lows. So far the action says no, the 9-period moving average is way more important, and we're using that as a bounce-off thing. Let me see the 120-minute chart. Oh, man, look at that. Look at the E-minis there with that V-shaped recovery. That is very nice. Let me go to the 120-minute Baidu chart. Okay, so we've got A, B, C, D. So, folks, what we always look for is from the most obvious lowest low bar, left side low bar in the Chapman wave. You look for the start of a count, and then you expect to go to at least a D. So there's A, there's B, there's C, there's D in the 120-minute chart, and there's a down arrow because it broke from peak D under the 9-period moving average, and the MACD turned down, and the stochastic dropped sharply from over 80% to 36.49. I'm suspecting that Baidu right now has got a bit of a problem, and that it's going to take something very special to get it back to at least 178.90 to 179.34. That's the area that it says, okay, now the MACD should be improving, and the stochastic should be improving in the daily. I could try for the next high of 181.63. I don't think it's going to get to C without a little bit more D, without some more consolidation. So by the end of the day, if you're long, you want to see 179.22 or higher. If you are looking to short, then because it's a peak C at a new all-time high, yes, all-time high, that's very unusual to fail. There should be a D, but it failed before at a G/C at 185.50. And pull back sharply, but there was an alternate count there. Here there isn't any alternate count. 170.14, 170.18. Unless I say to myself, all of the technique says that I could use Chapman wave phantom peak right there, but it's really, I don't like to do that. That's really pushing the envelope of the technique, and that really was a D, and it's a phantom D because you used a phantom A. So I'm just putting that in as a question mark, and I'm putting the question mark above it. And I'm putting here, phantom peak, question mark. Oh, man, if you type in the wrong thing. So Baidu, Baidu, there it is. I'm putting over here. Yep, it typed on the chart. Well, it should be Chapman wave phantom peak because there's no other. Phantom peak with a question mark. So that's my outlook right now. Now, if the market continues rallying, and it rallies into the close today using up the Chapman wave, the technique that I just discussed a little while earlier, the Chapman wave trend gauge, which said that between now and Wednesday, the latest, there should be a 7 to 9 point move in the E-mini futures, which should translate into quite a good move into the cash index, where we've gone from 1871.50 to the high right now of 1879.50. That's 8 points. So maybe this is it. Maybe we're watching it right now as we speak. I'll be right back. This is Basil Chapman sitting in for Steve Rhodes. Usually I do the Tiger Technicians Hour at 11 o'clock. I'm sitting in for him. He has internet problems. I'll be back. Dow's up 22, S&P's up 3.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, we're all back. Basil Chapman sitting in for the one and only Steve Rhodes. Had an internet problem today, so I said I'll take over, and I'm going to be back in just a few minutes for my own show at 11 o'clock called the Tiger Technicians Hour. My service is called The Opening Call, a very comprehensive daily report that I give every day with all the positions that we have. And right now we're looking at something very interesting. I want you to just show you, well, two things I want to show. One is the naked chart that made a peak E-top and now is skyrocketed to a new high. Therefore, you have to put an up arrow because this is a new high, and we have to call this A because it made a new low, and the Chapman wave, that just negates any chance of a recycle. This has to be called an A, and it says in the 10-minute chart we should have a rally over the next hour or two going to at least a D. Now, look at this. This is fascinating because here's the same chart, but remember the floating A that I was talking about? So the floating A goes A, and now it's a peak A right there because it made a lower high bar. Here we've got a floating B. In other words, this is going to at least, and now I can put in an up arrow because the stochastic is over 80%. It's at 91%. MACD's expanding, so this is still very positive. So on the day, as I said to subscribers this morning, we could see a move to the upside. If the Dow is, I said, above plus 40 at noon, that's going to be a positive for an up close. If it's minus 20s, that says, be careful, it's already stuck. And so far, it's moved very nicely. So I just wanted to confirm that was not an A right there, you remember, because the low bar cannot be a high bar except when you get to a D under certain conditions. So that's not A. This is peak A. This is leg B. And if it goes 25 cents higher, it extends the B even further. So we'll go through that. Maybe I'll follow it in my hour. Now, Akamai, I thought I'd look at stocks that are making high-level consolidations. Spectacular moves. Look at Akamai, leg F in the week in the monthly chart. All-time high was 360, what was it? 345.50. I remember I got a sell signal the exact hour of Akamai, and I was watching it real closely. I had a friend whose wife was number 5, I think, on the list of people that worked for there. But I'm not sure if they got out until it was way, 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 way lower. Anyway, Akamai Technologies making a peak D in the weekly, has made a peak D in the weekly. Now, this is going to be very interesting because what have we got? We've got in the daily, we've got a peak D and the MACD turned down and the stochastic turned down and it's under the 9 EMA. So I put a down arrow. The question is, what if it makes a leg E? What if it goes higher than 63.15? I tell you what, I'll discuss that in my show because we're about to run out of time. Instead, let me do this. I'm going to give you parameters to watch if you're used to just listening to Steve's show, not mine. The parameters are very simple. That if the Dow goes above 16,505.70 in the next 2 days, well, anytime in the next few days, without breaking under yesterday's low of 16,334, then what's going to happen is that it recycles. And I should not have actually put that, I shouldn't have put that down arrow. That was not right. It's just an F with a question mark because I don't know yet because the MACD is still very strong and stochastic still at 88%. So we're watching this real closely. Good action so far today. And I'm suspecting that the Dow will move higher, but that 16,588 level is really the thing that I'm watching most closely. Because a slice into the 16,650 says, hey, don't you be short here. There's still very positive action to come. But in the meantime, what I'm looking at is if it fails under 16,505 in the next day or two and then suddenly slides under 16,320, I'm looking at 16,290s as really important support. So those are the parameters to watch, and I'll make it real easy. The VIX index has to really skyrocket. It has to get into the high 15s for this market to continue down, and you need bad news for a bear phase to take place. I'll be back straight after this for my show. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.